About a month ago, we posted a video where I was talking about the potential market crash and what Chris and I are doing to prepare. Essentially, the most important part of our current investing strategy is getting ready to buy wonderful companies when stock prices drop, or in other words, updating our watch list. As we speak, Chris and I are spending a lot of time building our recession watch list, which we want to consist of companies that we would be very happy to own for the next 10 to 20 years. And as of now, we have a short list of about 30 companies, and today I'm going to share the first group of 10. And just so you know, for now, this list is in totally random order. The first company we have put on our watch list is Microsoft. Microsoft is the world's largest software maker. They have popular products including Windows operating systems, the Microsoft Office suite, and Internet Explorer. They also sell successful hardware products like the Surface Touch and the Xbox. They are one of the big 5 information technology companies in the US, and even though we personally like using Apple products, we recognize that Microsoft Windows is by far the dominant desktop operating system worldwide. We believe that Microsoft is a strong business that will survive an economic downturn. The next company we have put on our watch list is Coke. I mean, it's a classic. It's one of the world's largest consumer staples, meaning that people buy its product over and over on a regular basis, and it is literally the most widely distributed product on the planet. There are only 2 countries in the world where Coke isn't sold. The Coca-Cola brand is worth an estimated $83.8 billion. That's more than Budweiser, Subway, Pepsi, and KFC combined. On top of that, Coke owns 20 brands that each generate more than $1 billion in sales per year, and they have multiple durable competitive advantages, including their secrets moat for the Coke recipe and their brand recognition. The company has been around for almost 130 years, and I think it's pretty safe to assume they will be around for a very long time in the future. Now let's talk about Amazon. However you might feel about Jeff Bezos and what's going on with the unionization efforts for employees, the fact remains that Amazon is the largest e-commerce company in the world. Amazon ships about 1.6 million packages every single day. There are approximately 1.9 million active sellers on Amazon, and by the end of 2021, Amazon had more than 1.6 million full and part-time employees around the world. They earn revenue through online stores, physical stores, third-party services, subscription services, and Amazon Web Services. They are a giant, and even if the market crashes, I think they will survive. Moving on, we have Apple. Aside from our personal love of using Apple products, we put this company on our watch list because Apple is one of the largest tech corporations in the world. Their total number of employees in 2021 was 154,000, and there are more than 100 million iPhone users in the US, and Apple Inc.'s market cap is bigger than the GDP of 25 countries in the world. Forbes has even reported that Apple has more cash on hand than the US government. So we think that Apple is a solid long-term investment. Okay, I'm sure you're starting to see a pattern here. Every company that we have added to our watch list is a company that we believe will survive an economic recession. In other words, we are looking for those companies that will be around for decades to come, even if the market crashes. They are either able to take some hits and keep going, or they're simply too big to fail. The next company I want to add to our watch list is Disney. I just love Disney. From the movies to the parks, Disney has brought a lot of joy into my life, but aside from my personal connection, Disney ranks among the world's most valuable brands. Thanks to ongoing creative innovations and a series of large-scale acquisitions, Disney is expected to maintain a top spot among the world's largest media and entertainment conglomerates, even after its centennial celebration. To give you some perspective on how long Disney can keep generating this content, there are over 26,000 combined names between Marvel and Lucasfilm character universes. Given Disney's impressive content portfolio, as well as the subsequent trickle down into parks, resorts, and other consumer products, we think that long-term Walt Disney Company shareholders will fare well. Next, let's talk about Costco. So Costco is interesting to us for a few reasons. They use a warehouse club model, and as of March 2022, the company was operating nearly 820 stores and had about 115 million members. Costco only makes a small percentage of its profits from its merchandise, whereas the bulk of its profits actually come from its membership dues. Also, Costco pays its employees well. Their hourly wages are above the federal minimum wage and above many other retailers. And Costco's advertising budget is Zero. They have a very loyal customer base, and we think that their ability to offer products in bulk at lower prices will help them last through an economic recession. Next on our list is Berkshire Hathaway Inc. Berkshire is an American multinational conglomerate that generated over 245 billion US dollars in total revenue in 2020. Berkshire Hathaway is currently the leading global insurance company, and the company wholly owns operating businesses such as McLean Company, Geico, and BNSF, among others. Beyond that, Berkshire is led by Warren Buffett and Charlie Munger, who we believe are the two greatest value investors of all time. So for that reason alone, we would like to own more shares, and we will keep Berkshire Hathaway on our watch list. Okay, I have just spent the past few minutes talking about how interesting these companies are, but none of this matters if we can't get these companies at the right price. Building our watch list is just the starting point for being ready to buy, and this video is just the start of our current watch list. Be sure to subscribe and stay tuned because we will be sharing more companies that we have our eye on in future videos, and on top of that, for every company on our watch list, we will do a full valuation video where we will do the company health check and run through the numbers to do an intrinsic valuation to determine our current strike price. Bringing us back to our watch list is Lockheed Martin. Lockheed Martin is a global security and aerospace company that is principally engaged in research, design, development, manufacture, integration, and sustainment of advanced technology systems, products, and services. Lockheed Martin is one of the big four defense contractors whose existence largely depends on the contracts given to them by the US federal government. It makes the most money out of the four, exceeding $35 billion a year, and it employs more than 140,000 people, and it has a presence in 46 states. Lockheed plays a critical role in U.S. national defense, and with the lion's share of government contracts, none of the other big four defense contractors could even hope to pick up Lockheed's projects and bring them to production on time. And for this reason, we feel pretty confident that they will be around for the long run. All right, now we come to Nike. Nike is another brand that we personally love to use. The company's operating segments include North America, Europe, the Middle East, Africa, Greater China, Asia Pacific, and Latin America. So basically everywhere in the world. And in the past couple of years, they have shown an ability to navigate volatility and effectively manage headwinds when pandemic-related factory shutdowns and concerns surrounding sales in China affected their business. Ultimately, the biggest factor for us in thinking that Nike will be a strong long-term investment is the power of their brand. And wrapping up this installment of our watch list is Visa. Visa Inc. serves more than 15,000 financial institutions across more than 200 countries. The company operates VisaNet, which is the world's largest payment system. The platform provides authorization, processing, and settlement of services for electronic payments. Visa also offers prepaid debit and credit cards that are issued by financial institutions. And during the fiscal year of 2021, Visa processed approximately 165 billion payment transactions for a total value of almost 13 billion USD. The thing we like most about this investment are the strong barriers to entry that protect Visa from potential threats. Of course, an economic downturn has a lot of negative aspects, but it can also bring opportunities for investors like us to buy wonderful companies at a discount to their intrinsic value. If the entire market drops, companies like the ones on our watch list could be trading at very discounted prices, and we want to be ready. Be sure to check out these other videos to help you get ready as well. Remember, earn more, spend less, and invest the rest, and I'll see you soon.